Invivyd Incorporated, IVVD, Technical Analysis General Overview and Trend. Invivyd demonstrates extreme volatility over the past 3 months, characterized by erratic price swings and explosive volume surges. After a prolonged downtrend from May through mid-August, culminating in a low of 0.483 on August 21, the stock experienced a dramatic reversal. The most recent session saw an extraordinary surge to close at 1.03, marking a 113% single-day increase. This violent shift overrides prior bearish momentum, placing the stock in a hyper-volatile short-term uptrend. The medium-term trajectory remains uncertain due to the abrupt nature of the reversal price and volume. Price action reveals a stark contrast between periods of lethargy and violent spikes. The stock traded in a narrow 0.48 to 0.80 range for most of August before exploding to 1.14 intraday on August 26. Volume patterns are equally extreme, with baseline activity averaging 500k ATR-2M shares, punctuated by astronomical spikes, 18.7 M shares on August 18, 12.1 M on August 25, and a staggering 186.8 M shares on August 26. The recent close at 1.03 represents a critical inflection point, with the massive volume suggesting institutional involvement or a fundamental catalyst. Moving averages, short-term averages are rapidly adjusting to the price explosion. The 5-day SMA at 0.654 and EMA at 0.725 lag significantly below the current price, reflecting the suddenness of the move. The 20-day SMA at 0.709 and EMA at 0.705 are similarly overshot, highlighting the magnitude of the breakout. The 200-day SMA at 0.760 and EMA at 0.760 now sit below the price, providing a long-term bullish signal. The price's position above all key moving averages confirms a technical breakout, though the lagging nature of these averages warrants caution due to the recent volatility. Technical indicators reflect extreme conditions. RSI at 67.37 approaches overbought territory, while stochastic at 32.70-20.68 shows early signs of bullish divergence. MACD at -0.0172 hovers near the signal line at -0.0269 with a positive histogram at 0.0096, suggesting potential upward momentum. ATR at 0.105 is exceptionally high, consistent with the price explosion. ADX at 22.53 indicates a strengthening trend. OBV at 753.5 million shows massive accumulation, while Chaikin oscillator at 19.8 million confirms strong buying pressure. CCI at 229.70 signals extreme bullish momentum, and Williams R at -16.74 indicates overbought conditions. Linear regression analysis reveals a steep upward trajectory in recent sessions, breaking sharply above the 3-month downtrend line. The slope has turned aggressively positive following the August 26 surge, though the sustainability of this move remains questionable given the historical volatility. The regression channel has widened dramatically, reflecting increased uncertainty. Opening price forecast. Given the extreme volatility and recent momentum, the next session's opening is projected between 0.98 and 1.08. A gap above 1.08 could trigger short squeezing, while a drop below 0.98 might indicate profit-taking after the massive surge. The exceptional volume on August 26 suggests strong institutional interest, which could support higher openings. Resistance and support analysis. Key resistances are identified at 1.14, August 26 intraday high, 1.20, psychological level, and 1.30, May-June support turned resistance. Critical supports lie at 0.90, recent consolidation base, 0.80, prior breakdown level, and 0.70, August low. Current price at 1.03 sits 0.11 units below immediate resistance and 0.13 units above immediate support. This proximity to both levels suggests potential for rapid directional moves, intraday high-low estimates. ATR at 0.105 implies an intraday range of plus or minus 0.105 from the prior close at 1.03. Projected high is 1.135 and projected low is 0.925. This wide range underscores extreme volatility, with potential for violent intraday swings given the recent trading patterns. Possible scenarios. 3 scenarios are plausible. First, a continuation of the rally above 1.14 could target 1.20 and 1.30, fueled by short covering and momentum chasing. Second, a sharp pullback to 0.90 or 0.80 might occur as traders take profits after the massive surge. Third, consolidation between 0.90 and 1.14 could establish a new trading range while the market digests the recent move. Technical indicators favor the bullish scenario but warn of potential exhaustion given the overbought readings. Conclusion: Invivyd is in a hyper-volatile state following a dramatic reversal. The technical breakout above all moving averages and massive volume surge suggest significant institutional interest. However, the extreme overbought conditions and history of sharp reversals warrant caution. Short-term traders should monitor 1.14 resistance and 0.90 support closely. Long-term investors need confirmation of sustained momentum above 1.20 before committing capital. Risk management is essential given the stock's violent price swings, with position sizing and stop losses critical for navigating this high-risk, high-reward situation.